Welcome back onto our special Insight Edge segment, and Mangalam is here to put the spotlight on Titan, which is under pressure on the back of its Q3 numbers. The business update gave away quite a bit, but what is impacting the numbers this time around?
Well, what's impacting the numbers this time around is that one-off that came by. You know, the company had taken an inventory hit of almost 250 odd crores. That's largely because of the duty cut that came by in the previous budget put out by finance minister. There was a positive from a revenue standpoint, not so much from an inventory standpoint, because they had to do a bit of inventory markdowns as well. But the good part is that all of that has been gone away. We spoke with the management. The jewelry business in the third quarter grew at about 25%. On an annual basis, the management targets 20% growth rate. The reason why it's slower than others is because the third quarter is the festive season quarter. So obviously, the growth rate would be a lot higher. The other part that they said is that margins, they would like to maintain their margins around that 11% mark. Remember, from the peak of around early teens, mid-teens, Titan's margins have steadily kept coming lower. The fact that 11 to 11.5% seems to be a bit of a bottom for here on is something that, the street may perhaps adjust to once again. But the fact that it's not going to go below that is something that we will, keep an eye out on. What also we need to keep an eye out on is the lab-grown foray. That was the key insight that came in from the management conversation that we had today. They spoke about lab-growns, but they kept their cards very close to the chest. The management went ahead and said that, we have some plans, but we are not going to announce them in public. So I think the street would await any announcement coming in from Titan on this front, because if this were to happen, then it would be the first large jewelry player and the largest one in the country actually acknowledging its foray here. And that would mean, a bit of more acceptance coming in from lab-grown diamonds. And in the very near term, it would increase propensity of jewelry that is bought just for adornment as against store of value. And that's positive from a revenue standpoint. How much does that do to their margins or not is something that we'll keep an eye out on. But lab-grown diamond is the talk of the town. And if Titan keeps its cards close to the chest and at some point reveals its strategy out there, maybe the street will eye that favorably. But all of those details kept by the management very close to their chest.
As they say, Jaisa Des, Vaisa Bhes. So maybe trying to get onto that lab-grown diamond bandwagon. We'll wait more announcements there from Titan. But we spoke to the management, C.K. Venkatraman, the managing director of the company, and listening to what he had to say.
The growth which we typically look at every year is in the ballpark of 20% from an annual point of view. And that's the kind of thing that we would be satisfied with rather than continuing to maintain the 25 in every quarter. So the long runway in terms of growth and our having just a single-digit market share, our focus continues to be on sales growth and with a stable margin around that 11% ballpark. That's what I would gun for. That's what we are pushing for.